Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M, as you know, is the first and only global virtual accelerator for technology startups. Our mission is to help 1 million entrepreneurs reach $1 million in annual revenue and beyond, build $1 trillion in global GDP and 10 million jobs. And in that mission is buried the philosophy of 1 million by 1 million. We are an inclusive accelerator. We work with entrepreneurs who are not fundable, maybe not fundable yet, maybe not fundable ever. We don't only work with the venture fundable companies. So in that sense, we are completely unique in that we don't reject anybody. As long as you're working within tech, our domain, we don't reject anybody. This is the 682nd 1M roundtable for entrepreneurs, the free roundtable. We do a lot of premium roundtables within the program, within the paid program, but these free roundtables have been going on since 2008. So it started with an experiment, and of course that experiment was successful. And today, over 300,000 people have participated in these sessions. We've been doing this almost every week since 2008. Maybe in a given year, we are not doing a roundtable 4 weeks out of the year, but otherwise we are here. So it's been an enormous amount of work. We're going to start today's session with Piyush Kharbanda, General Partner at Vertex Ventures, and we're going to discuss Vertex and Piyush's AI investment thesis. We've been having, for those of you who are following this series for a long time, just as the AI conversation has been, accelerating a couple of years back, and more action started kicking in gear. With that action, there was a lot of confusion. So we started doing these conversations, AI investment thesis conversations with our investor guests, and started, clearing some of that confusions up, and really trying to understand what is happening in the market, what are people seeing, what am I seeing, what conclusions are we drawing. So welcome, Piyush. It's great to have you. If you want to start by just introducing a little bit about Vertex. We've had your partners here before. Ben has been here before. So, but let's reintroduce and then dive into the AI conversation.
Awesome, that's great, and super excited to be here. Let me give everyone a quick background to who we are, what we do, and we can pick it up from there. Vertex is a fairly global venture capital setup. We were born out of Asia, particularly Singapore, many years ago. And as large organizations and old organizations, we've gone through a bunch of changes over the last few years. In our most recent avatar, we sort of act as a network of funds across the world. So we have a team in the US, we have a team in Israel, we have a team in China, and Ben, who you've met, and I and our colleagues are a part of the Southeast Asia and India Fund.
Mhm.
Our fund is a $540 million fund. We raise capital from third-party investors, but the sovereign fund of Singapore, which is Temasek, is an anchor in our funds.
Mhm.
Um, our thesis sort of is to invest, like I said, in Southeast Asia and India, but we are sort of not only investing in our local markets, but also investing in software startups that are globally relevant. Um, and this is, so my focus remains India, and a large part of what I do and where I invest is the India to US leg or India to global leg, where folks are building high quality software in India and selling it globally. Um, and that sort of is very relevant to what we're going to discuss, which is how AI plays a part in sort of creating an upheaval in that market. Uh, and it's been a pretty rapid upheaval, and we are sort of going through it as we speak. Um, so that's about us, but we're not just software investors. We actively invest in the local market. So the Indian consumer and in financial services space is a big area of what we do, etc. So fairly horizontal. We also, from a thesis perspective, are more a Series A investor,
Mhm.
and that's sort of also been an evolution. So we are among the earliest investors on the cap table, but probably not the first in many cases. And in many cases, we are the first as well. But that's a quick background. Personally, I've been here for about 9 years now, and I've been investing for about 14 years. I used to work with a private equity firm before this. Indian mid-market private equity is very different from what you know in the West.
Mhm.
So I used to be with an Indian mid-market private equity fund for about 5 years before moving into venture.
And when you say you write the Series A checks, what are you looking for in the ventures where that you're willing to come in and at the Series A
Yeah,
level? And let's start with your specialty, which is the B2B SaaS worldwide um,
yeah.
get area.
Yeah, yeah. So it's a very nebulous definition, and in today's world, this definition is changing so rapidly because startups are finding scale before organization. You'll see startups that are millions of dollars in revenues in 7, 8 months, and in the earlier days when we were investing in SaaS, 7, 8 million means going through a bunch of hoops and building resilience within the organization. It would take time, it would take a lot of pushes and pulls and failures to get there. And so you're looking at a mature organization at that scale, or even at a 3 million scale, or like $5 million scale. That's completely changed today, right? We are seeing the revenue traction much faster than we are seeing maturity. But to go back to your question, what we are looking for starts probably with founder market fit and sort of how well aware the founders are of a given market, how in tune they are in solving for a problem that they've identified. And in some ways, we are trying to see and look for early signals of product market fit. And especially in SaaS, we are trying to look for signals which are repeatable sales motion, repeatable problem solution fitment,
Yeah.
repeatable ability of founder to go and do sort of early stage non-scalable things that they're sort of percolating through the organization and trying to make that scalable. So like I said, early signals of product market fit, sometimes they're defined by revenue, sometimes they're not. And I hate to sort of give revenue ideas around product market fit because it completely varies by industry, domain, segment, etc.
Okay. Um, but you are doing Series A without revenue? Is that?
No, we wouldn't. We wouldn't.
I don't think so. Yeah.
We wouldn't do like I know folks would do Series A without revenue. We wouldn't.
Yeah. But by and large, I think it's actually not a bad thing not to do Series A without revenue, because Series A also has moved, right? The size of Series A has moved, the stage of Series A has moved. So I think putting in a large amount of money without understanding what is the business, what is the sales cycle, what are the what are the parameters of the business, it's not a smart idea, because then you end up with these companies that don't grow fast and end up in this twilight zone. They have venture money, but they're not growing exponentially, and that means they're not going to raise another round of financing, but they're stuck in this weird place, right? So it's not
Right.
very good
Yeah.
to
Yeah.
invest in unvalidated ventures. So let's go back to your starting comments about the trends of startups coming into Series A with a lot of revenue. Is that something that you're actually seeing in your deal flow?
It's sporadic. Okay, so I need to qualify this a little bit. We invest specifically on the India global leg,
Yeah.
and so the trends that you see in the West are a little bit are somewhat muted when it comes to what we see here and somewhat delayed. So in our deal flow, it's not as much as what I hear from my friends who invest in the US directly, like US startups.
Mm-hmm.
Uh, but we are starting to see faster than before revenue traction
Yeah.
and
Yes,
revenue growth.
that is a very fair point. There is this company in Stockholm that is growing incredibly fast, Lovable. And there's a bunch of others here in the US that are growing very fast, and that is creating, I say VCs are salivating for deals like this right now.
Yeah,
But
absolutely.
the reason I'm probing it with you is that how much of this is showing up in the Indian VCs pipelines? Is this real?
It's still early, but it is fairly real.
Yeah. And when you see these deals that are starting to find some velocity early on and coming to you with that as one of the proof points, what are you seeing? Is it, what kind of go-to-markets are you seeing that are giving them this kind of velocity? I understand that it takes fewer people to build software right now because of all these AI co-pilots and this and that. So yes, at the product building part, the MVP building part, the actual product building part, there has been a lot of efficiency that have come on the wings of AI. But what are you seeing in the go-to-market motions in the Indian companies that are finding some velocity as they come to you in your
Yeah.
pipeline?
Yeah, I think there are, and I'd sort of generalize this because we have to invest in companies that are sort of globally relevant. So you have to look at companies that are doing this in the US or in Europe, for example, as well.
Yeah.
Uh, in general, what we're seeing is that these companies have a very high quality, sort of better than MVP that is early into the market
Mm-hmm.
and sort of gains um, enterprise virality in that the product is is significantly better at solving specific problems that these companies have faced and have not had the ability to solve. Let me give you a few examples, right?
Yeah, great.
If you think about voice applications in clinics
Mm-hmm.
or or a provider to a payer interaction where there is a bunch of back and forth that happens on calls between a provider and a payer.
Mm-hmm.
Some of these problems had not been addressed at all. So if you are if you are providing care under as an ACO, as an as a care operator, you have really not been able to call your patients. Or if you have a claim as a provider and this claim has been disputed by the payer, you've really not been able to get on a phone and sort of explain and provide all the details and documentation.
Mm-hmm.
With a bunch of these new voice AI applications, you're starting to see immense traction on these problems that were earlier than now not addressed at all, or were being done in a very unscientific manner. And now when you launch these kind of applications, the uplift that a small business or a large business doesn't matter, the uplift that they get in terms of their overall business problems and their own solutions is just so dramatic that the traction is just going to go through the roof. Now the question that we often end up asking from a framework perspective is, how sustainable is this?
Mm-hmm.
Is this a flash in the pan? Are there incumbents who will come and eat up your cake and launch a product or an adjacent product from their distribution strength that will sort of uh, take away all the advantage that you have in being early in the market?
Mm-hmm.
Because in each of these segments there are incumbents.
Yeah.
Uh, and in many cases the early leadership could be pretty ephemeral, and we saw this uh, specifically in the medical transcription space,
Mm-hmm.
where we saw a bunch of companies sort of go very early into the market for medical transcription in clinics. And then the incumbents with their, sort of regulatory uh, uh, edge and their distribution edge were able to come in and sort of get either partnerships built with a Bridge and Epic is one, and then Nuance entered with their own product. And then the early incumbents were sort of left,
Hanging.
you know, yeah, clutching at straws. And so just to round it all up, right? The overall thing here is the same as it was in software investing, which is to identify what's the long-term sustainable moat.
Yep.
And often enough, the answer lies in founder market fit and founder resilience and the ability
Domain
to
knowledge,
execute.
deep domain knowledge is where a lot of those exit barriers come from, right?
I'm not so sure yet. I'm not so sure. Deep domain knowledge is something that actually incumbents bring to the table in a
As
lot
well.
more deeper manner than startups do. And so you're right to some extent that domain knowledge is extremely relevant, but I don't think that's the unique, that's a unique defining factor.
I think it depends on the application really and the use
Sector
case.
stage, absolutely.
So
Like,
the domain, if there is domain specific insight that brings in a lot of integration into the surrounding technologies and so on and so forth that the incumbents do not really have. There is, there are real insights that you're doing something differently than what the existing market is capable of doing. That's where the differentiation comes from and the moat comes from. But if it's highly replaceable software, somebody is not doing it today, but it will do that. Somebody who's an incumbent with great distribution capabilities does it in 6 months, you're basically gone.
yeah, exactly. Exactly. Like, it's like we have not seen in the past innovation cycles incumbents innovate at the pace at which we are seeing incumbents innovate today.
Mm-hmm.
That is a statement of fact that we now live by in how we evaluate startups.
Yes. Yes, I have to
And
agree with that. The other, if you look at the enterprise software ecosystem, there are these big stacks already in there. And these guys have the ability to go in and stick agents into these stacks with deep integrations here, there, and everywhere, across use cases, etc. If you're not an incumbent, having that level of leverage is not going to be so easy.
yeah, absolutely. Uh, Having said that, that also comes with its own disadvantages. So I'm not saying that I will not invest in any startups that are going to take on an incumbent, because the incumbents themselves have their own problems. They're, they need to refactor a bunch of culture and code, and both go hand in hand. And that's not going to be easy.
Right. It's all built on old architecture, right? It's on pre-AI
Absolutely.
architecture. So the whole stack
Let me
is
give
built on
you
pre-AI architecture.
let me give you a very simple example. If you think about call routing, right?
Yeah.
Call routing is a technology that I did an internship in 2006, and that behemoth of a tech stack has been built over many, many years.
Yeah.
And now you could just put an agent to route calls without any of that logic built in. Now,
Yes.
would the incumbents that have millions of dollars of revenue coming on the back of that technology stack and that differentiation, would they be able to rip it out and replace it with a bunch of agents that are very well configured to work together? I don't know. Uh, but I would bet that many of them won't be able to.
So, Piyush, what have you invested in that has passed all these diligence tests
Yeah.
and emerged as okay, this looks like it could stand on its own without
Yeah.
getting blindsided?
Yeah. So maybe I'll just give you our framework and our thinking around how we invest in AI and AI applications, right? So if you look at the basic rudimentary way of thinking about this, there's the model layer, there's the infrastructure layer, and the application layer, right?
Sure.
I think we are not carrying the bazooka to solve at the model layer. I think, and this is my personal opinion, the infrastructure layer is in a flux and will remain in a flux for a long time. The
Mhm.
way the model layer changes will have a very lasting impact on the infrastructure layer, and very little of what we see at the infrastructure layer today will be the standard in the near future. So we are not actively looking at that space right now, unless we find something which is extraordinary. Um, and that's not an active area of thinking. Where we are focusing a lot on is applications, and
Mhm.
specifically vertical applications. Till very recently, a large part of what we'd been doing was where vertical applications were augmenting humans. So a human in the loop led application. I'll
Mhm.
give you an example. One of the very recent investments we made was in a company called Hakimo.ai. They take uh, security as a service, so physical security as a service to small business owners across the US.
Mhm.
Um, and a classic example of what they do is they go to a car dealership and they say, we will put technology on any camera that you have, and we will augment it with a human in the loop. So if there is any sort of
Break
uh,
in or whatever.
incident, if there's any kind of an incident, we will run this through a stack of escalations, culminating in a human who will call the cops, right? So that's a human in the loop system, which not only solves a key problem, which had not been solved till now,
Mhm.
but also gives you an outcome where to a segment of users who are not ready to trust technology to do it end to end,
Okay.
right? Uh, so that's an example of what we've done. We've done something very similar in the construction industry, where there's an entity called an estimator when it comes to construction, and when it comes to sort of plumbing, HVAC, etc.
Mhm.
And what we have built, this company called Attentive has built a product called Beam that augments the workflow of this estimator by providing them estimates based off of drawings, where they
Mhm.
would have spent hours getting an estimate, and these guys give a very highly accurate estimate using machine uh, machine learning and AI. So
Okay.
it's not just necessarily just generative AI. There's a lot of traditional machine learning also at play in some of these applications.
Yeah.
And these are a couple of examples of what we've done. But to round it all off, vertical AI, as boring a sector, as much of human augmentation and replacement as possible, workflows that are not being touched by incumbents is a core thesis for us.
Interesting. I gave a talk this last weekend at KLog about Indian startups, past, present, and future. And the recording will be available soon. We'll publish it. You can take a look. One of the things I said is that, India has this background in the services industry, right? And the services industry came out of low-end services, BPO, et cetera, et cetera. But now with AI services, with human in the loop AI services, wherever there is a do it for me scenario, this is actually to India's advantage, especially if this services can be done from India.
Yeah, I,
So I
I
think,
I couldn't agree more. I think a lot of VCs in the Valley are sort of sounding a death knell for the BPO industry. I think if the BPO industry, for instance, or the services industry does not um, innovate and partner with a bunch of these product platforms, they will struggle. But what we are very excited by is the fact that a bunch of new services companies will emerge out of it. And that's an area of interest for us as well.
it's going to be a different kind of BPO. It's going to be BPO.
Exactly.
It's going to be a higher end BPO. It's going to be human augmentation within that BPO
Yeah.
stack, and it's just going to be a different kind of services
Yeah.
industry.
And
There is a services industry that should
you'll
do very well.
you'll price on outcomes rather than on people, like on bodies, right? And I think that in itself is a large enough disruption to the BPO business model that many new players will emerge.
Yeah.
Just the business model disruption will cause a lot of opportunity for investors.
Yeah. Now, based on your portfolio and your colleagues in India portfolio, what are some of the best investments that have happened with this thesis?
Oh, but they're all in our portfolio. No, I'm kidding. Uh, The I do think that the writing is still super early, and we are excited about our AI portfolio. And I'm gonna stop. I'm not gonna talk much about the market in general where we've not invested. There are some interesting companies out there, but we think that the revenue traction that some of our portfolio is getting, and we have a few portfolio companies in the AI-led, business process reengineering, SaaS, etc. space, uh, which are doing quite well and growing faster than anticipated. So we are pretty excited about all of our companies because the revenue traction opportunity right now is unlike, if you're AI led, is unlike even what the SaaS ecosystem saw in 2001 as well.
Oh, yeah,
So
definitely. But the market is much more ready to buy software right now, and there is real hunger in the enterprises for AI insertion in
absolutely,
their workflow.
even in the mid market,
Mm-hmm.
even in boring old vertical application in the mid market, there's an appetite to buy high
Mm-hmm.
quality AI.
Yeah, definitely.
So we are pretty excited. We have a company called Certa where we did a Series B um, in 2024, later part of that. Um, they are finding significant traction. They only sell to large enterprises, and they're finding significant traction as they've sort of retooled their entire application on the back of AI.
What is the product?
They do what is called third party management, so TPRM, which is a category in itself. But with the help of AI, what they do is they help large enterprises onboard, manage, and work with vendors across use cases. So they'll work with a Boeing or a Pepsi or a Walmart and help them onboard and manage vendors, all their vendors across the world.
I see.
And this sort of becomes a system of record and a system of management for all these vendors.
I see. Okay. All right. I'm gonna uh, go a little bit to a 30,000-foot level and ask you to comment on what else you're seeing in India that we should, keep in our vision in terms of trends or developments or concerns. What's going on?
Let me start with a little bit of concern that we run into as investors. I think this is exacerbated in the AI world a little bit more, is that there's a tendency to build Me Too products and applications
Mm-hmm.
and sort of, the fast follower approach uh, to building applications and so on. I think that's a little bit of a challenge for the ecosystem in general. Uh, it's been like this for a while. We've had sort of fast follower approach on application development.
India has always
Uh,
been fast forward. India has always been concept arbitrage.
I do think though that the concept arbitrage worked in a specific kind of a GTM. It doesn't necessarily work very well in the AI ecosystem where capital is really not going to help create a moat or create any differentiation. So
Mm-hmm.
very small lean startups without the need for it used to be a function of specific kind of GTM and much better quality of service. I think both of those are sort of getting disintermediated with AI.
Removed with AI, yeah.
Yeah, with AI. I think this approach is a little bit behind the times now. We'll
Mm-hmm.
still see high quality companies being built, but that's a little bit of mentality thing that we see. Uh, Not in every startup. I don't mean to sort of say that it is pervasive, but it exists. The interesting bit is that we are starting to see market leadership companies like companies that are first to market with products,
Mm-hmm.
and that's exciting. So like we have attentive. They're probably the first to market with AI for construction estimation. There really isn't anyone who's doing this. We have companies that are building AI first headless applications for specific industries. And those are very, very exciting. And they're going after incumbents with business models that incumbents can't challenge, which is outcome led, uh, very specifically focusing on revenue side problems that incumbents have not been able to address. So, so that is the exciting part. And the other side of it is the challenge that we deal with.
Now, the company, an example like Attentive, that's a deep domain knowledge driven company, right?
It's a company that sort of listens to the customer, builds very fast, takes a product out to market, gets feedback, and iterates really rapidly. And I think that's what is needed. And if you're first to market in any segment, sector, etc., you need to work like that.
Yeah. And any insights? That's my last question before we switch to the entrepreneur pitches. Any insights on go-to-market motions that you're seeing that are working particularly well?
I do think that the AI SDR approach in certain markets is working. It is not necessarily it's not necessarily a solved problem. A well-oiled SDR machinery might work better than an AI SDR. But for early stage startups, I think this whole AI SDR approach is sort of leveling the playing field. And if used well with high quality content, with well thought out ICPs, with well orchestrated sort of workflows on what to do, how to target, good oversight by a smart team member to sort of give good quality feedback, it can result in a very high quality top of the funnel. The other thing that's happening is that once this top of the funnel is generated, like you said earlier, the tendency to buy in both the mid-market and the enterprise is actually much higher than it's been before, especially if it's AI.
Yeah.
And so it makes life easier.
Yeah.
And so you don't necessarily need, and so what you're seeing as an outcome is that sales efficiency is higher than before.
You
So
know,
that's
the one that I'm watching with a lot of curiosity and excitement is what's happening where people are just putting something out there in the open source domains, and that becomes the lead magnet, and then you provide, you know, premium software on top of that to, you know, build the real revenue flow. That, you know, that's been the commercial open source model for a long time. It has always been a very attractive model, but now with AI, that one is actually doing really, really well.
still early days in India, very early days in India.
Okay. We've seen a couple of, before AI actually, we've seen a couple of companies come out of India in that mode, but yes. Okay, good. So very interesting conversation. You know, I always say to all my guests here is that we need to check back in 6 months because things are moving so fast and so much is happening.
Yeah.
So
absolutely.
Piyush, you're welcome to stay for a bit. I know you have to leave in 10 minutes.
Yes.
We're going to switch to the entrepreneur pitch section. We have two scheduled pitches. Remember, this is a safe working session. You don't need to be nervous or defensive or scared. This is, you know, we're working on something together. And if you disagree with feedback that you get here, that's really your choice. What you do with the feedback is your choice. It's your venture. It's your prerogative to do whatever the hell you want to do with it. So Vinay, you are up first. Please unmute your line.
Hey, thanks, Ramana, and thanks, Piyush, for all the talk and great insights on the AI part of it, how it's going. I'm audible, right, Ramana?
Yes, you're good.
Okay. At KLVIN, I'll start my pitch and I'll just go about it, and you let me know if you need anything in the between, right? I was in US until 2019. I moved back to India to do my MBA with ISB in 2019, and thereafter I started working in Hyderabad. But early 2023, in a Friday evening, I received a call from one of my friends asking me to come out his factory because they had an incident there. So I went there, and it's a factory machine failure that led to some serious accident, and we have taken care of the things and stuff. That made me think through because the experience was a little traumatic with the scene of accident and the way we need to take care of things with keeping the details confidential, right? I started digging deep into the understanding how and why in 2023 with a lot of AI and all the technology that's been there, why we still see MSMEs or small medium industries still face this kind of issues, ad hoc machine breakdowns. Suddenly they break and you have not only revenue loss, safety issues and stuff. So I went, spent my next 3 to 6 months walking around Hyderabad factories, understanding the problem with boots and ground. What made me realize is the problem that we're talking is more prevalent than what we see in the news, because not everything, not every action, not every failure comes into the market, right? The data is been completely hidden. So that's where I started working on the thesis of we need to solve this problem. I think this is the right time because we have all the tools to make it very effective or more democratized right now at this period of time because of the AI sources and stuff. And I come from a enterprise level software development for 2 decades across companies. So that knowledge, I thought that would be really helpful. So that's where we started KLVIN with an idea to build something that will monitor the machines continuously and use AI as the backend and provide preventive and predictive analytics. So that's where we started, and we build our own. What we're building is an AI-based industrial intelligence platform. When I say that, we are not only monitoring a single machine, we are building a cluster of machine behavior, right from an individual machine all the way to the plant and to the multi-location intelligence. So that's what we are building. As part of it, we have both components, hardware and software, where we have our own custom hardware that we design to measure critical parameters from different machines. For example, in a motor, we take it 9 parameters based on the size of it and feed our data to the machine, and we predict this. So our business model is we provide a SaaS solution, the dashboard that we provide. As you see, we provide a real-time monitoring. Along with that, we give a preventive monitoring for any thresholds that breach, so that most of the times in industry, the lead time is being missed. There is always a lead time before an accident happens, right? That's being missed. So what we are trying to provide is to give that edge for the operator or the manager to take an action before it's too late. That is as a part of preventive mechanism. And then we have our own predictive analytics that runs over a period of time. The AI models try to get the data and see how the machine is operating and predict its failures and stuff. We are mainly focused on small and medium scale industries that we want to operate on because of the various reasons that I've already told, the lack of manpower in that, the knowledge in the manpower and churn rate, which is being a cyclic effect in these industries. And we currently got our MVP ready, and we have also already deployed in multiple industries. I'm based out of Hyderabad region because of the proximity. We are already deployed in multiple industries segments there. You can go to the next slide, Simon. Yeah. So in an attempt to acquire customers in the B2B space, right, we have taken multiple actions. So we are partnering with machine breakdown. For example, in motor, if you are working with motors, we partner with motor maintenance and service industries operators, where when a machine comes to them, breaks, they fix it. While they're sending it, they upsell and provide information about our predictive maintenance or preventive maintenance.
How many of these motor repair shops have you partnered with?
We are currently partnered with 3 of them in Hyderabad.
And that gives you access to 200 plus MSMEs?
Yes.
Telangana?
Yeah. Yeah.
So
One of the players that we partnered with is around 40-year-old existing entity in Hyderabad, which has a good reputation around Hyderabad. So that's the key advantage that we get. And also, I've taken membership in CII, Confederation of Indian Industries. Because of virtue of it, we get access to all the industries in Hyderabad that we're able to get into.
So
And
how
also,
many actual customer pilots are you doing right now?
when you say customer pilots, you mean to say paid pilots or pilots per pilots, pre-revenue?
Well, I want to know both. I want to know how many paid pilots, and I want to know how many pilots that are the pipeline to the paid pilots.
So we currently, as you see the logos there, we had all three of them are free pilots that we're running. Couple of things, right? We need to run data. We need to have data for IAM models. So that's where we are trying to get the data. All these three are free pilots that we run. We are currently signing to
paid pilots.
No, free pilots.
Free pilots, okay.
Yes. And we are currently sending two proposals for two different industries, which are getting signed for paid versions.
Now these three that you're running paid pilots at?
Free pilots.
I'm sorry, free pilots at, what is the path to becoming a paid pilot? Do you have an agreement with them that you show such and such activity, such and such success? How do you define success with them, and is money going to start flowing in at some point?
Yeah, for example, one of the industry heritage, if you take, we started with one device, one machine that we're monitoring. They have asked us to deploy two at a different location, and then they asked us to expand it to another location. So and the way we are saying is they're seeing value. So what we are saying is we are having conversations with them to convert into a large scale, because now we are tested and they see the value in it. We are trying to have the conversations with them to get them on board in a much bigger scale for revenues.
So in a situation like Heritage, what is going to be the estimated deal size when you do turn this into a paid project?
Heritage currently has around, based on the look, Hyderabad has 3 different plants. Overall, AP, Andhra Pradesh and Telangana, I think they have around 30 plus, if I'm not wrong, not less. And each factory has around 10 different machines that we're trying to monitor. See, we want to monitor only also the critical part of it, not every small machine that can be done. So we are looking at 100 plus machines that we can monitor with these 30 plus factories.
And how do you charge? What is the pricing?
So we charge for the variant that we're looking at. We charge around 4,999 per month as a SaaS model for the dashboard and the intelligence that we provide. And if there is any customization that we need, we increase the price based on the customization, that the level of customization that they ask us to.
So what did you say?
From
4 rupees?
5,000 rupees, I would say. Yeah,
5,000 rupees. So 5,000 rupees for per machine.
Yes, we say license. So, for example, in Sri TMT is an iron bar TMT bar machine, where they've asked us to customize a module that is 3-phase, which has one component and master slave. We've devised a 3-in-1 component, and they were agreed to initial conversations. They are agreed to pay 10,000 per machine, because it has a little bit of complexity involved in it.
Okay. All right. Let's go to your questions.
Yeah, I've been. We are also funded, actually. So I just forgot to tell you that I'm funded by iCreate, which is the government of Gujarat's initiative via Startup India Seed Fund. We got 50 lakhs. We're also backed by IIT Hyderabad, their incubator, as part of Nidhi Prayans. We got grants in Mighty Tide. I'm an ISB, Indian School of Business alumni. I work out of ISB. So the network also gives me some support with respect to that. The major question when we try to pitch for the VCs like Piyush and others, right? I'm a single founder. I tried getting founders. It's been I see founder is also a kind of a marriage relationship, right? You need to get this energy and focus and everything right.
I think getting a random co-founder is not a good idea.
Yeah, that's been the case with me. I tried doing, with the relationships and friends, but we couldn't really take it to an extent. My question would be, a single founder, if I want to pitch it to greater VCs, how do they see it? How do I present myself? Because sometimes a single founder is seen as a weak founder or not having what would you say, backing by a second team member. That's what been my
I'll
feeling.
give you my point of view, but I know Piyush has to drop off. So if you want to take the question, Piyush, and add a few points quickly, you're welcome to.
Yeah. So I think at the very at the super early stage, I don't think the answer lies in the team. It lies uh in what sort of network and leverage you can bring to the table beyond yourself. But at the stage where I would start evaluating, I would say the answer lies around what kind of capabilities you've built around you and what is the strength of the team. Because if it is a single founder, it's not just a matter of how many hats you can wear, but it's also a function of how you solve problems that
Yeah.
will obviously arise and who you throw those problems at to get the right answers. So I think it's a function of what other people you can add at
Yeah.
whatever employment slash advisory roles.
Mhm.
Uh, but the ideal solution for you at this stage, in my view, is to still keep looking for the right co-founder because you're still very early. It'll be more relevant to get a co-founder than not.
Okay. I thanks, Piyush. I think that's great an answer. I do have an advisor, a bunch of advisors and mentors that I keep going to, which are like industry-driven experts in the spaces where, from a security aspect of it, I fall back on a security enterprise CEO who's been in the industry for the last 13 years, knows all this stuff. From a IoT standpoint or a hardware standpoint, a software standpoint, I fall back in a gentleman called Hari, who has been in US, is a CTO for Talatrix, if you guys have heard it. And then he moved back to India and he's currently CTO for Laramed. So, and one gentleman who in the operations. So there is a bench of advisory committee that
Vinay,
sees.
let's not go into advisory committee. Advisory committee does not get you funded.
Okay.
I'll give you a much crisper answer to what's going to happen here. The problem you have is not co-founder. The problem you're going to have is this company is going to have difficulty achieving velocity or convincing investors that this can go in a high velocity mode.
Okay.
So you start, if you want funding, you figure out a way to address that objection.
Okay.
Whether you're a single founder with or you have a co-founder, if you cannot address the fact that this company can grow at a high velocity, this company is not a fundable company.
Okay.
So, however, the opposite is also true. If you can, like you showed something that I like a lot, and if this is something that you're going to execute on, that may be the key, the secret to your velocity, which is this electrical motor repair shops becoming your eyes and ears on the field, and they are reselling and getting you into pilots and getting things going, and they start the pilots out, and that then blossoms into multi-factory, multi-machine deals. If you can create a repeatability around this method and you can get velocity, if you can show velocity based on something like this, I don't think your solo founder issue is going to be a huge problem.
Okay.
So don't try to force a co-founder into your situation, because that also comes with a lot of problems. If you don't know the person and you try to work with somebody whom you have no working relationship with in a co-founder role, as an employee, it's fine. You can hire somebody. As you can afford to hire somebody. It's, as far as I'm concerned, a solo entrepreneur does not mean a solo person, right? You can have 50 people working for you and doing all the things that need to be done. Solo founder is somebody who does not have a co-founder. That's the only issue, and that comes with its issues. It has, a co-founder relationship is an intense relationship. So do not stumble into that, because coming out of that relationship or breaking that relationship up is incredibly cumbersome. But try to achieve velocity. If you can achieve velocity, then the VCs are going to want to invest in you. The problem Indian MSMEs they don't move fast.
Yeah, I can second that. I've been seeing it. It's the cycles have been very slow, but they show a lot of interest. I think that's the second question. How do I convert? Okay, Piyush, you had
I gotta go, folks.
Yes, Piyush, absolutely.
Thank you very
For
much.
staying, and
Thank you.
thanks for
Sincere
your
apologies
insight.
for this.
Thank you, Piyush.
Right.
Thank you so
Everyone,
much.
bye.
Your second question is something that I'm going to have to look at what you're doing from a sales motion point of view, and advise you on the nitty-gritties of that.
Okay.
So if you decide you want to work within 1M, I will shepherd you through that process.
Okay, let's see how it goes. This is some of the deployments that I want to show. Yeah.
Let's come back to you. Let me work with Martin, and I will.
Sure.
We may have more time to do more Q&A at the end of the session.
Yeah.
So,
Thanks. I'll go on
please
mute.
unmute your line. Thank you, Martin. Please unmute your line and tell us what you're working on.
Yeah, thank you so much, Shramana, for the opportunity, and thank you, Maureen, for coming to this meeting easier, and thank you, Piyush, for the AI investment thesis and the valuable. Especially, I will learn a lot from that because the product that I'm working on is working pretty closely with AI as well. Okay, so. Most people don't fail due to lack of motivation. They run out of energy. So Prosperity CoPilot is a digital coach with an energy dashboard that helps users achieve any personal or professional goal they define across 6 categories: health, wealth, relationships, self-care, spirituality, and others, by tracking the physical, mental, and emotional energy. We are building the world's first human energy management system. Now, this slide highlights mostly the problem that we have seen across professionals, creators, and entrepreneurs. The failure is not due to the lack of goal. It is due to because people are running out of energy, they are running on empty. Yet there is no system that tracks internal energy the way wearables track steps or pulses, etc. And content isn't enough. People, need a timely, intelligent nudges based on real-time energy data. Next, please. So meet Prosperity CoPilot. This is more than, this is not another or more than another productivity tool. It's a human energy management system. It's like having an energy coach in your pocket, tracking your dips, nudging you in real time, and helping you move forward when your battery is low, running low. Whether it is health or business goals, this digital companion adapts and supports your journey. Next, please. So once you define your goal, Prosperity CoPilot becomes your companion, checking in on your inner battery. It reads your patterns, senses your dips, and responds in real time with built-in behavior design tools like Thought Reactor and Momentum Stabilizer. Users don't just set goals, they stay powered to finish them. Next slide, please. So talking about the market opportunity, the shift is very clear from consuming content to building capacity. We sit at the intersection of wellness, productivity, and coaching. And Prosperity CoPilot isn't just another app, it's a category definer. Next, please. Now, this slide shows the real traction behind the platform. We have distilled 15 years of coaching into tested framework and built 5 versions of the core logic engines. The UX is ready with wireframes designed for effortless engagement, and with over 16,000 LinkedIn first level connections and 463K Quora views and 2,000 plus subscribers for our newsletter, our early adopter community is already in place. Next slide, please. Now, the business model is, it starts with the individual, but it grows into an ecosystem. It's a digital habit loop that can plug into personal and then grow to teams and at the organization level. So we'll be starting with the SaaS model, and the platform will be offered free, and then when the when people want more out, when they like the platform and want more out of that, then we will start charging the pro and nudge them to pro and ILIT. Next one, please. So this isn't just a solo founder trying to do it all. I know my strengths are transformation and system design, but I also know this particular system needs to be deeply integrated into technology. So I have two co-founders with me. Gangadhar Nadar is say an engineer by education, and he has 7+ years of app development experience, working in multi-layers to national as well as international, mostly international customers. And then Nisha Rajan is from the business intelligence background. She has worked with marquee customers internationally. So her expertise in understanding the markets and data analytics and all is going to help us in business intelligence and expanding the business. Next, please. So basically, what we are here is to ask. Our ask is $60,000 at an equity of 10%. And now the use of funds will be initial research and development, then MVP build, user testing, adoption campaign, and legal. It will have a lot of IP, IP aspects also. So we have already listed a few areas wherein we will be applying for patents in future.
So, Martin, pre-seed financing does not work like that.
All right.
No investor will give you money to build a product, a pre-seed product. It's more or less expected at this point in the startup business that you are going to bootstrap your MVP and get the product going in the market before people are going to come in as pre-seed investors. And the kinds of what you're calling proof points and what you're calling validation is not considered validation. Free users reading some content is not considered validation. Even if you had this product in the market and a lot of people use it for free, it's not going to be considered validation. B2C freemium is an incredibly difficult business model. The conversion rates are unbelievably low. We're probably talking 0.5%, 0.2% kind of conversion rates. So, you cannot build a venture scale company with those kinds of numbers. And what is the definition of a venture scale company? Something that can go from 0 to $100 million in 5 to 7 years. That's a high velocity company that can deliver real revenue really fast. That is the definition of a venture scale company. I do not see this as a venture scale company. It's something you can bootstrap on your own and, build a small business around, but I don't think this is a venture scale company. Okay. Hope that's helpful.
That is really helpful. Thank you so much.
You're welcome. I'm going to give you some input on how to use 1Mby1M. You're very welcome to use the program and, get the help you need. And, the focus of 1Mby1M is on education so that you don't waste your time. I don't like the idea of people committing years of their lives on things that don't really turn into solid businesses. You are going to kind of stumble around knocking on investors' door. 40 investors are going to reject you, and you're just going to waste a lot of time. And that's not the way to be productive. That's not the way to build companies. So what we do in 1Mby1M is really try to give you this kind of very direct feedback and very direct guidance on what can you do, what can be done, what can be achieved. You don't have to be fundable to use 1Mby1M. 1Mby1M is perfectly okay for bootstrap founders as well. We emphasize tremendously on bootstrap founders. We have a bootstrap first, raise money later strategy primarily, which is a much better strategy than trying to bridge scale out of the gate. So everything is at 1Mby1M.com. It is a completely virtual global program. Anybody can use it from anywhere in the world. The premium program is our full acceleration program. That's a 1 year, and you can renew for as long as you want. 1M Basic is our curriculum. If you have not done a startup before, I strongly recommend learning the 1M curriculum. You can learn it through premium, you can learn it through basic, it's accessible through both. But the curriculum is really powerful in getting you much further than where you start as a first-time entrepreneur. The learning curve for a first-time entrepreneur is very, very steep. So there's a lot to learn. Please learn it efficiently and through a methodology, which is what we offer here. So go to the website, look at what to expect from premium, basic. There are people who ask for consulting. We offer consulting, but I recommend that you start with basic or premium, not with consulting. Upcoming free roundtables, you can only pitch once at a free roundtable, but you can attend as many times as you want and come ask questions. All of May, we have free roundtables. Questions about this program after today's session, if you have questions, Irina is your contact, irina@1mby1m.com. So that's it. You're very welcome to come and join the program, and I'll start working with you. We have premium roundtables, private roundtables that happen every week as well. If you have questions, I can take more questions. We do have a bit of time. Please let me know if you have questions. And those of you who are not on the panel and want to ask questions, just use the public chat or let Maureen know. She'll put you on the panel if you want to talk.
Okay, so Martin this side. Basically, probably, I could not explain the product properly, so certain things were missed, I suppose. Basically, this product will have
it doesn't matter whether you explain the product properly or not. If you go back and listen, the recording of this session is going to be available. If you go in and listen to the recording, what objections did I offer you? It is the business model. B2C Premium is a lousy business model. It converts very poorly. Building a venture scale startup that can go from 0 to $100 million in 5 to 7 years is almost impossible with a B2C Premium business model.
All right.
That's
Thank you for
that's
that.
the objection.
Thanks. Yeah.
So be careful. If you are early in your journey, you may even contemplate whether building that business is the best way to spend the next 5, 7, 10 years of your life. Correct. So don't get into something that is going to be a source of constant frustration. It's not going to be a success.
Thank you, sir.
Yeah. Anybody else? Just know that I will tell you what I see. I'm not going to sugarcoat. I'm not going to, tell you things that don't make any sense. I'm going to tell you, even if you don't want to hear what I have to say, I'm going to tell you what you need to hear. So, Vinay, for example, one thing you must be aware of is that something that Piyush did not mention, but the way the Indian VCs invest is that they would do B2C in India, but when it comes to B2B, they don't like India-facing companies. When they're doing B2B investments, they want companies building products for the global market, starting with the US. So why? Because of the same velocity reason that I just mentioned to Martin on the B2C SaaS, B2C Premium. The same issue with B2B serving the Indian market, especially the mid-market. They are extremely slow to close deals. And they want incredibly high-touch customer service. As you know, the soles of your shoes get worn out trying to close deals, and they just waste your time, and the sales cycles are very long. So these companies don't tend to grow very fast. So it's okay if you bootstrap. I mean, you will probably be successful in building a company, and if you bootstrap a company and build a $1 million, $5 million, $10 million company that is, has good profitability, that's okay. That's perfectly okay. Not a
That's
problem.
good. That's good. Thanks, and
You're welcome. Anybody else? I don't see any hands up, so I'm going to wrap up for today, and I will see you next time. Bye. Good luck, everybody.
thank you so much. Thank you so much.
Thank you so much. Thank you so much,
Very
Samrat.
welcome.
You take care.